How's it going, guys? It's Ralph here from Beyond the Huddle, and welcome to this week's Bitcoin forecast. As always, we're going to talk about the COT, then we're going to go ahead and move on to our volume and price breakdown. Now, before we get started, I want to talk to you guys about the new offer that we have here. It's a coupon code. You guys just type in 7-day off at checkout, and you get a 7-day free of our indicator suite, and that comes with our BTH volume profiles, which you guys have seen a lot of, and I've been getting a lot of questions on. But if you don't know what they are, feel free to watch this very short video here. It'll explain to you guys why it's important and why you think why you should be using it and why it's better than obviously the TradingView ones that most people look at. So with that being said, let's get started. Okay, so getting started here with the COT first, as always, we're going to take a look at the asset managers' positions for their longs. And as you can see here, they've actually increased their longs by 108 contracts to a total of 5,525. And they've reduced their shorts by 39 contracts to a total of 1,004. Now, obviously, the first thing that we always do is we look at the percentage. And if you remember from last week, it was around 83%. And now they've actually increased to almost 85%. So that's a really good sign to see that the asset managers, the large players in this market, are actually, starting to increasing their position. So then what we want to start looking at then is obviously the shorts, and the key here, as I keep mentioning week in, for the past 2 weeks, is that we want to see these shorts go below this average right here. Will it happen next week? Will it happen the week after that? I don't know, but hopefully it happens soon, because then we can start to call for a bottom in this market. And remember, price is going to happen first. It's going to move first, and then you're going to see it in the order. So if I hover right here, you can see right here how it shows up a number, colored number. I think it's like a pinkish color number, 497. So if I look at 2 weeks ago, when that candle closed, it was 1,043. You can see that was an increase, a wild increase from 968, right? So if I go to the last week, we went from 1,043 and then we declined to 1,004, which is exactly what this shows here, right? 1,004. So we lost 39 contracts. So then that explains, so when this week opens, we can look back at last week, and that explains why last week was a bullish week, right? So then the idea is that if these shorts keep lessening and they go below the average, then that trend should continue, and then we can call for a low. Why? Because they are overwhelmingly bullish, okay? So for those of you that forgot or didn't see my video on how I explained the March 2020 drop, or if you guys didn't see how I called this high here back in April of 2021, it's because back then, you can see right here that we were more net short than we were net long, right? So you can see right here, the red line was on top of the green line, right? Then eventually the green line bottoms out, the red one tops, and they're diametrically opposed, so they'll do the opposite of each other, and then they start to revert back to the other side. So look at what happened here when I called for the high back in April and May of last year. You can see how we were net short, right? Now, and this percentage, okay? So we're percentage short, okay? And now look at this here. This is why I'm still so wildly bullish. Imagine, even during this entire 50% drop that we've seen in price, it is not at all like the high in April, and it is not at all like the drop back in March. Why? Because they are net long, okay? They've been percentage long above 60 here, and they're 80% above long right here, okay? So then the only thing you can say is that the big difference was just that the shorts were above average here. They obviously were above average here, but that was expected, right? Because they were already short. They were positioned short. They had more shorts than longs, and right here they were positioned above average shorts, and that's fine because they had more shorts than longs. Okay, so drastically different for those of you that are thinking that because we've fallen 50%, this is the market's gonna die, and this is the same exact as March. It's not. It's completely different. As you can see right here, these longs are just wildly bullish, which is nothing compared to, look at this right here. While the high was being made from January to February, March and April, and then into May, look what the longs were doing. They fell off a cliff, and then you needed to wait for the price action to catch up, okay? So in this specific case, that's a little bit different because you could have seen it coming first in the individual positions, and then finally the net position caught up right there. You can see the percentage position. Then the percentage position caught up, and you can see right here it went above 60 right here in late February, and then it did it again in April, and that's how we got the high right there. We called it pretty nicely. And then you see right here when the low was made, what happened? The long started to pick up some steam here, and look at that. By the time we went above 60, that was the low right there. And then now we've been working our way up to the 80%. So again, very, very important for us to not see the price or the value area on the yearly model here, which is what's gonna, we're gonna start talking about that in the next section of this video. Really important to not see this yellow zone right here give out. But with that being said, before I talk too much about it, let's move on to the price action part and the volume part, and then start talking about that a little bit more in depth. Okay, guys, so now that you understand the macro sentiment and why we want to be bullish based on a percentage, but we're waiting still on these shorts to go below the average, so we really don't know when that will happen. So now we have that sentiment, but we could use the volume profiles that we created here Beyond the Huddle using our new indicator in order to find the highest probable zones or areas where that could potentially be possible. Now, as you can see right here, this is like a zone, but let me get rid of that because I can just use the actual profile. That was before I showed you guys what it actually was. That's why I had to draw that line that way. But let's hide some of these profiles and let's focus just on the yearly, okay? So when we look at just at the yearly, you can see right here that if you were to zoom out completely, and you guys can see why my target, so look at this right here, it's really funny. I don't know if you guys remember this a few weeks back when I called for a low, the low here, and then I was long up to 52K. The reason I was long up until 52K is because that was the yearly value area high. So the idea is that unless we can break back above the value area high, you're going to see a lot of resistance, and then you're going to work your way back to what, guys? The value area low on a yearly model, okay? So the idea is here that if you picture on once 2022 starts, you want to look back at the previous year and then figure out where all the volume was traded, right? So if I know that 70% of the volume was traded in 2021 between this extreme high here and this extreme low, which is known as value areas, the high and the low, then I want to try and sell as close to the value high if it's used as resistance as I can, or if it breaks above it, you want to use it as support, or you want to try and buy as close as you can to the value area low. Why? Because if you're long-term bullish based on your sentiment tools or whatever, some macro, some interest rate, whatever you have, then you don't expect to go below these value area lows. We call that bear trending, and really awful things happen when you bear trend. We've shown you guys that on our monthly models using the indicator here for the monthly chart and our quarterly, and that's actually how we got this 30% move lower right here, because we started trending on a quarterly and a monthly, okay? So again, you never ever want to be involved in coins that are bear trending. But yeah, so essentially the key here is that if we are such macro bullish because of things other than price and volume, aka the COT, and also our sentiment analysis, right, our SMI, then that means that you should be expecting the value area lows on a yearly time frame to hold, okay? So if you can buy as close as possible to the POC right here, the point of control, or even the value area low, then you're sitting pretty good, okay? So this right here, oops, sorry about that, guys. That's an alarm here on my phone. So if I click on this here and I extend the POC to the right, you can see how that is the exact low that happened here in price at $33,800. That was actually the previous year's POC, okay? Now, that does not mean price has to reverse it, right? Because what we do is we use the higher time frame zones as targets, and then we want to use the lower time frames. So I would use the weekly time frame. So this is a 3-day here. Let me hide that. I don't need to go into that right now, but I would use the weekly time frame in order to gauge how the reversal should go, and also our USDT bias indicator, right? So if you can see right here, I still haven't switched the name. That's my bad. It's still called Bitcoin monthly weekly levels, but this is our new USDT indicator, and the whole idea is that as long as we're above that, we expect the USDT prices to be bullish. Now, this week opened up, went down, just barely missed it. And actually, guys, that is not the right level. So this is what we're going to do. We're going to get rid of that. We're going to come to indicators. There it is. And there we go. So that's the right level. So the week opened up, went straight down, and then just barely missed it. But again, this is just to know our bias. So what is the model of the market doing now? Okay, so we already know that we bounced out the previous year's POC, right? And, you know, a little bit further than that is the previous year's value or low. And we definitely don't want to see it go below any much further below that, because it would completely invalidate the 85%, you know, overwhelmingly bullish idea that the asset managers are. So in that case, what we want to do is make sure that these weekly value areas stay either within or they bull trend. So if this within, I call it a consolidating market, and if it's above, I call it a bull trending market. So you can see right here that once we started going above this right here, the liquidity is so thin up here that prices should slice through those levels quite quickly. However, if they don't, if you start to see a lot of resistance, then you're going to start to, you know, fail to build value above that level right there, and then you're just going to reject. And that's exactly what we did. So in my opinion right now, again, although I am long-term bullish, I use my weekly levels right here to sort of guide me. So at the moment, my target would be the weekly value area low, and then the USDT bias, okay? So if we break below those two, I would no longer have any positions in this market, and then I would just be waiting to see when we go back above the weekly value or low, right? Or when we go back above the weekly value or high. So that's how you guys should be thinking every single week. How is value forming from last week, and what is my higher time frame value, and are we hitting it right now, or are we bouncing off of it as resistance? Okay, are we using it as support, or are we bouncing off of it as resistance? So there you have it, guys. Again, as long as we stay above this, I am bullish, but I don't expect Bitcoin to bull trend or move up aggressively unless we can go back above this value area high right here on just this weekly candle, okay? And then I don't expect us to have any large moves lower unless we go below this value area low right here, okay? So that's what I have for you guys here on Bitcoin today. I hope you found some really good value in this. I hope you guys can follow the logic that I threw at you today. It was a little bit different than the previous analysis on price. I'm just trying to gauge what you guys like best. So if you like it this way better, where I sort of explain the tools as well while I'm trying to give you guys the analysis, let me know. It's not something I have to do every single week. Maybe I could do it every 2 or 3 weeks. But yeah, with that being said, I hope to see you guys on our Discord chat. The link for the free Discord group is in the description, and remember that there's also the coupon code, so you guys can get all these volume profiles and the USDT bias indicator, which is very, very useful to predict what the bias will be. And then again, everything is found in the description below. So with that being said, guys, I hope you have a great day. Talk to you soon. Peace.